There is something strange happening in the global economy at the moment, and most people are looking at it from the wrong angle. They look at the gold price and ask themselves, why is the price falling? Because all what they learned over their lifetime was during crisis, gold and silver are strong assets. They are the safe haven. But why on earth are the gold prices then falling for the last 5 months? This becomes the main question. And just a few months ago, at the beginning of this year, I made a video about the current gold price. Back then it was on peak level, right? And I said this will fall and this will crash. It's just a matter of a few months, and 6 months later, here we are. Gold has massively dropped in terms of price. Now we can ask ourselves, why is this happening? Or we can try to understand the mechanisms behind that. Because to be honest, you don't need to be really smart to understand back then that the gold price is about to crash, that the silver price is about to crash, because there has been not a single time in history that a price development chart just went up like this. It's always a zigzag shape with hard setbacks throughout peaks and lows. This is quite normal. And throughout my analysis, I found major evidence that this will be the case in just a few weeks. Right? I posted this video and I saw comments like this. You can see over here that most people were hating on the video because it was against the trend. Back then, every YouTube creator told their community to buy gold, to invest in silver, and that they will be long in and it will go to the moon and all of that crap. But to be quite honest with you, if you take out the emotion and just do a proper analysis, you would have come to the same conclusion as I did at the beginning of this year. And that's the most common mistake I see people make. They look at events and ask themselves, why is the price of gold, for example, going up? Or why is it going down? They don't even try to understand the mechanisms behind that. And it's the same with countries selling off some gold reserves like Turkey. Turkey was over the last months discussed heavily in the mainstream media, where they said Turkey is selling off their gold to protect their economy. Maybe the gold price will even crash because of that and stuff like that. But what many people don't understand is those moves, which institutional investors like governments do, are long planned before the actual event. So for example, if you've ever sold some assets for yourself, there will be not a single time probably that you've directly sold all of your assets at once, right? You maybe have invested in some stocks, you maybe had some scenarios when you wanted to cash out and take some profits with you, but in the best case, you've planned your decisions months in advance. You do that to take out the emotion, and it's the same with governments, it's the same with countries. They calculate and then they act based upon their analysis. And we should not only look at events when something is happening, we should try to understand what's laying behind these events. Let's try to stick to our Turkey example, as it is one of the most visible in this field, right? Because it was also discussed heavily in the mainstream media. As I said, the mainstream media told that Turkey was selling off their national treasuries to fund oil and to defend the lira, to protect the economy. Well, this might be true, but it might be false. We have to look behind that. So the main question is this really the case? Does Turkey have such a struggle at the moment that they are selling off their gold and other countries do the same at the moment? Or do these countries know something which others don't? We will look into that. According to the World Gold Council, it was found that central banks at the beginning of the first quarter in 2026 were still buying gold. 244 tons to be exact. But also the same report stated that other countries like Turkey, Russia or Azerbaijan were selling off gold. And now you can ask the question, okay, some are buying, others are selling. Why is that? And that's the part that really matters. The world is not selling off gold, and this doesn't mean that the price drops are explained because gold has become useless. It's like a transfer of ownership. You sell something, there is a buyer for it. It all comes down to which party does get what out of the transfer. So if you try to look at it from a buyer's perspective, they might think, okay, I need protection because gold can secure my economy. It can signal to investors that I have everything under control. So they think I can attract investors, that they come to my country, they build up infrastructure, they build up production sites, for example. I can then have new job offerings for my nation. And this is how a country which acts as a buyer of gold could think at the moment. And other countries are selling gold or parts of their gold because they need instant liquidity, because they have maybe some problems which they have to fix with cash. We will come later to that. But what I want to say is it's the same asset, but it serves completely different purposes, right? It's the same with everything we own. Every item serves a specific use case, and that use case is heavily dependent on each individual's desires and needs at once. That's really important to understand. And I really don't like it when some creators just tell their audience that this is like a first time ever event in the history that countries are selling off their gold. Let's only look at Turkey and we will see that Turkey is just doing moves like this every few years. Just look at the chart I've brought with me today for this video, and we can see that in 2023, before the general election, they sold around 1/3 of their gold reserves. That's a significantly higher amount than they are selling off today, or better said, 2 months before today, and I will come to that. But the most important thing is they've already done stuff like this on a much bigger scale. And if you watch the graphic then closely, you can see that over the past 3 years, they've been stacking up their gold reserves again and again. Because Turkey is one of the biggest countries that own gold. And during their 2023 election, they needed to free up cash. They had struggles in the country. They needed liquid cash to put it into the economy. And now we are talking about that a country just sold a fraction of their gold assets to free up cash again. What the most creators and the mainstream media didn't tell you is that last month alone, Turkey was again big on buying gold. And that's crazy, right? Why are they doing that? So just 2 months ago, they are selling parts of their gold portfolio, and just 1 month ago, just 1 month later, they decide to buy gold. Why is that? Well, think of it like this. Think of it like an individual investor, like you and me. We bought something for cheap, the prices rose over the years, and suddenly there is a need. Yeah, I need liquid cash. Where do I look at? I look at some assets, and I look then at the asset where I say, okay, I made a good return on invest, and I cash out. I take the profit, and now I have liquid cash. And with that cash, I can invest it into maybe another opportunity. I can maybe build up a business. And for countries, it means not, okay, I have one business model. It means investing into infrastructure, attracting global investors, partnering with global companies, giving them support to get them into their country. This is a really different case than most people would think. Plus, what's even better is if you sell off your assets, you can also put it directly into your economy. You can try to stabilize your national currency. And this is something which most people don't get. They think like a country is selling off something, they're consuming it, and now they're poorer. This also happened not only with Turkey, but also with other countries. And as long as the countries are converting, not spending, converting their assets from one investment class into another, then there is hope for their future. And now we can look at the other side. In the case of Turkey, their analysts probably predicted that it might be a smart time to sell off their gold assets, to cash out, because when you look at the graphic, we are still near on an all-time high. From my perspective, it's still a high probability that gold will fall over the next few months, maybe 1 year, and then it might be even better for countries like Turkey who are selling off gold or who sold gold to buy back later the gold at an even cheaper price, right? So the same asset sold for high, bought back later for cheap. That's smart investing if this all happens. But I'm sure if countries are doing moves like this, they have analysts in place that normal personal investors like you and me can't even grasp how much depth those analysis has. And now the question becomes, well, when Turkey and Russia and Azerbaijan are selling off their gold because their analysis is so smart? Why do countries like Poland buy gold at the moment so strongly then? And this is a very interesting question. Matter of fact, before we come to the reasons behind that, if we look at the chart again from Poland, we can see that over the last 10 years, the gold reserves of Poland 5x. So 5 times the amount they had back in 2016, they do have now in 2026, and they are still going heavily into gold. But why is that? Well, it's not that Poland has maybe a different analysis of gold, but Poland has a different valuation for gold than Turkey at the moment. Turkey is looking out on cash, free cash, and Poland is maybe looking at a different purpose. Maybe they are looking on stability, showing strength to investors and saying, I'm a safe haven because I'm less dependent on the financial system. Just look at the gold reserves I built over the last 10 years or 20 years, right? So it's the same asset, but serves a complete different purpose. So just saying that, well, Turkey is selling off gold, Russia is selling off gold, the gold price will drop. It's nothing else than man-made fear. And this is an issue because people will probably take a loss on their investments because they start to panic. But for you, at the moment, it's important not to panic, but to understand the reasons why countries are doing this. Again, just to underline this, Turkey has a massive different situation than Poland. Turkey is surrounded with war, with inflation, with a weakened economy, with a weakened national currency. So they are fighting different wars at once. They are not just fighting the physical war, they are fighting also the global economy war, and therefore it's important to understand same asset, different purposes. And this brings us to something which is really tied to emotions. It's the behavioral layer of investors, and this mainly comes directly from the individual investors in the market, which also play a big role in those industries. And most of the times it's human, it's normal. Their investment decisions are tied to emotions, and at the moment fear is dominating the markets. And unfortunately, I know also a lot of people who cashed out on their gold assets because they thought, when countries are selling at the moment and everyone is telling me to sell, and I see the price chart of gold dropping heavily for 5 months and I've take up an L, it would be better to sell off at the moment. And this is the complete wrong strategy because you're looking at triggers, you're not looking at the value behind it. And I know a lot of other people who bought gold for cheap 10 years ago, okay? And they kept gold, kept it, and it was an all-time high at the beginning of the year, and they didn't sell, they stick through it. And just as the market 6 months in has a little setback, right? It's not a massive crash, but it has setbacks, that's normal. And countries are starting to sell gold and physical assets. They started to think, well, I could now probably cash out and pay down my mortgage even more, maybe not everything, but a good half of it, and I would convert my assets. This is really dangerous. Why? Because if you have gold assets laying around, right, you can cash them out easy. When you need it, go to the jewelry store, you go anywhere else, pawn shop, wherever you like, and you cash your gold in. What happens is you have free cash available for you to invest or to secure your living, whatever it's needed for, when it's needed. But when you transfer wealth from one category, from physical assets that are easy to cash in, to another wealth category which are much harder to cash in, like for example your property, your home you're living in, then you are really tightening up the clothes you're wearing. If you've watched one of my recent videos where I talked about where do you stand financially and compare it by age groups in different categories, right? Physical assets, by which age would you have which types of assets in the best case. We did a comparison of that on my channel, and especially in this video I try to explain the differences between property wealth and physical assets wealth tied to commodities like gold and silver. As I said, properties are so much harder to cash in when something happens, but physical assets like gold and silver are easy to cash in. If you decide to convert, well, yeah, you have the same net worth, but you have much lower flexibility, and in times of uncertainty, flexibility is king. So what I want to say with this is there's always a story in how you look at these things and what your needs are in that moment. And there is always a public story that's told, and oftentimes there's also a story told on the balance sheet. It's the same for a country. There is a public story where a press relations guy is talking to the cameras, and there is a balance sheet story. It's nothing else than you as an individual. If you are deciding to do a certain action, let's say you sell something, then there is maybe an official story you tell your friends, but there is a real life story behind that where only you know the truth why you did these type of actions. But to be quite frank with you here, the balance sheet story is much colder and much more direct. Numbers don't need a story. They talk for themselves. And numbers ask only one thing that matters most. And the question is, does the country, when it's a balance sheet of a country, of course, does the country have enough money coming in to cover what's going out? And for many countries, this question becomes harder to answer throughout time. Most of the time, the answer is, and this will be a little bit political, it depends. And then you realize when country X liquidates, for example, asset Y, then they could easily maybe cover what's going out. But the far deeper structural question, which is much more important to answer, is, does the country have a plan behind it? Does the country want to build an additional income stream that they get a much higher return on invest compared to sitting on gold reserves? This is the main question. If a country is just selling their assets, it could be gold, it could be oil, it could be anything, just to pay for consumption, then the story becomes, of course, totally different. And one of the best examples for that is Venezuela. They were in the 80s one of the richest nations in Latin America. But instead of reinvesting their oil money into lasting businesses, they started investing it into consumption. To cover this deficit down the line, they tried to print even more money, which led to the financial collapse of that whole country. And to understand this is so important because every country that wants to stay alive, right, needs dollars. Better said, money is just a commodity that enables you to do things. And if you have other things that get you this commodity, then you're able to transfer this wealth into another stream. As long as this stream is no direct consumption and is generating you revenue, which is higher than the alternative before that, then you are on the winning path. So basically, if you import energy, you need dollars. If you import food, you need dollars. If your debt is in dollars, you need dollars to repay it. It's simple as that. It's, if you want to break it down, heavily influenced by the behavior of your country. And how your country behaves depends massively on the economic levels of defense, how I call it. And we can try to summarize it like this. At first, countries use income they generate from foreign trade. For example, the next layer is they use reserves. Then the next layer after that, they sell liquid assets like the US Treasury bonds. And if this isn't sufficient enough and the pressure continues, then they start selling or swapping gold. And unfortunately, at the moment, many countries are at that exact point where they are selling gold. Not because that their economy is collapsing, but because they think that they have maybe other ideas and plans to keep the economy alive by investing it into different sectors. So instead of having pity with countries that are selling their physical assets from their national treasuries, you can think of it like this. If you see a family who is forced to sell their jewelry because they're in a bad shape, right, and they need it for survival, they need it for their consumption, then most of the times when we hear something like that, we get sad because it's normal for us humans to feel with them, to have empathy for them. But on the other side, if we hear a success story where people cashed in their jewelry just to start a new business and this business grew and they made it financially, then we get proud because this was a smart decision, right? And once you understand this, that this is exactly the same concept just for countries, then you start seeing the same patterns everywhere and you stop panicking when you hear something like Russia, Azerbaijan and Turkey is starting to sell their gold because they want to invest it in defense or whatever. There is all the time a much deeper plan behind it than it's told. And this is important to understand. Just remember this. Every seller has a buyer. The asset itself does not disappear. It just changes hands to someone who values the new asset more than the asset they had before. From my perspective, the main question, what's important for people to answer is, what does having cash even mean? Especially when countries can print as much as they like. The result is that the system will continue working whilst the people are in the midst of it and they get poorer and poorer. This is the result if you heavily lay on cash. And this is what it makes so scary, because most of the times the economic change does not look like a direct crash. Sometimes it looks or feels like that the money you've had last year buys you less this year, or that the raise you've just recently got didn't change your quality of life. Maybe it got even worse. If you like this video, give it a thumbs up and subscribe to our channel. I see you next Thursday. See you. Bye.